Hello, everybody. Thank you all for joining. Some of you I'm seeing for the second time today, and I appreciate it. And the people that are here today are winners because when you spend a lot of your life focusing on the winners, the best creators, the best geniuses of our time, the best investors. Since a young age, I've always done that. I've been obsessed with trying to find out what makes these people special. Well, today we're going to jump in and have a look. So once again, thank you all for being here. Now, markets are hard. Last year was some of the toughest year for many who've been in the markets for 50 years. It was a historically bad market, but markets change fast. And this framework that we're going to go through is kind of, I don't know, what is the 8th, 10th, 15th video in the Investing 101 series to help people profile themselves, understand what makes other people successful, how to be like them, etc., identify your strengths and weaknesses. And that's what this is. We're going to look at a famous guy today. I'll mention his name in a second. This is part number 4 of kind of profiling a legend, what it takes to be a great investor, the right temperament. I think it was Ralph Waldo Emerson wrote in his essay about experience. Temperament is the iron wire on which beads are strung. Don't correct me on that. I could have got that wrong, but it's so profound when you think about it. And Ray Dalio believes everything that you do is all about identifying your blind spots and catering to them. So let's just jump in. Today, I'm going to talk about this guy, Stanley Druckenmiller, and we have profiled on this channel all the top investors. We've been through in a few red herrings as well to see how our methodology works out. But basically, what we've done is we created a kind of a 4-category matrix that you can identify people. Time preference, whether it's short or long term. Are they analytical or not? Are they focused or not? Are they risk averse or do they like risk taking? And basically, we have profiled Stanley here on our model, and he prefers long-term investments. He's a quant guy. His focus is broad, and he likes taking risk. And his top-down approach that combines long positions and short positions in all types of assets like stocks, bonds, currencies, futures, he's been very, very successful. In fact, he recently said on Bloomberg, he never had a down year, ever. Think about that. He got smashed a few times, but he always came back. And that's one of the key takeaways from this is people sometimes get beaten down by the markets and they leave. They leave. But he had a story back in the dot-com bust where he saw that dot-com companies were crap and he shorted $200 million worth of them. Okay? He lost $600 million in 6 weeks by shorting these companies. He was right. They all went out of business, but he was too early. And that goes into another point where timing is important. Having a longer time preference increases your odds of success as well. And in fact, even recently, he said, I think he got into AI stocks 5 months ago on the Bloomberg interview last week, which was just so much goodness to share from that. And I'll pull out all the good points here. But he said he got crushed on index shorts. He was shorting the S&P 500, got smashed. But he was playing the other side of the fence on the AI stocks and did really well over the last 20 weeks. So that is key. So let's jump in. Also, a quick reminder, I'll add this Investor 101 playlist. I also have a playlist on personality types too. If you're interested, I'll add those later. But this is where this type of video belongs. Not only have I profiled all the top 30 investors on Earth in history, but I also profiled the Patreon community. So it's interesting to see the makeup of that community too. And we have videos on that too. So you can find out who you are yourself, what your blind spot would be, and how you can shore that up. So if you want to invest and be successful, check it out. So let's talk about what are the success drivers ranked for the best investors in the world. As a quick reminder, number 1, they are highly analytical. I am highly analytical. It's a very, very important trait. And if you're not, you can shore that up. Second is focus, most important. Even though focus can mean, focus on one sector like bonds or crypto or equities, It can also mean focus on doing one thing at a time, like getting into one category at a time and going a mile deep on that. But you can't be scattered. And that's very important. Even though Stanley invests in different assets, he tends to focus on one narrative at a time. We'll talk more about that later too. Also, time preference. Longer time frames are important. The more time you have, the less risk you have, which is good. And risk, those that risk more get more return. So remember those 4 key traits as well. Now, another piece on personalities before we jump into Stanley. He is in our top, 7 names here. And these are the top people focused. In fact, Bill Miller was a demigod in investing, but he screwed up by going short Tesla. And I think that's because his son made him do it. Some people just hate Elon Musk, and that makes them want to short Tesla. And that's a blind spot. That's a bias. You have to remove biases when you invest. So Bill Miller screwed up, so he's going to get dinged on the next update we do of this. But all these other fellows, they're all thinking, okay? And sadly, they're all men too. They're all intuitive. 75% of them are intuitive, they 100% are thinking, and 65% are judging. So that NTJ piece is very, very important. If you're introverted or extroverted, it doesn't matter as much. But the NTJ tends to be a very common characteristic for all of these investors. What this means, in case people aren't familiar, thinkers are more objective, less likely to let emotions cloud their judgment. This is important, especially in investing. Judgers are organized and decisive. Very important to be able to pull that trigger, ladies and gentlemen. And intuitives are more creative and able to see patterns and trends that others may miss. Like AI. Check out my AI video from December and why I was on the AI train. So that's that. Now, what top investors lack sometimes, and it's these 3: sensors, feelers, and perceivers. Now, feelers tend to make decisions based on their emotions. That's bad. This is why this is a data-driven channel. Sensors tend to focus on the present moment, which can also be a disadvantage in the world of investing. You need to play where the puck is going to be. You've heard me say that 1,000 times from Wayne Gretzky, the famous hockey player who said that. And perceivers tend to be open to new experience, which can be a strength in some cases, but a weakness in others. And in the world of investing, it's important, critically important, to stick to a plan. All right? Unless your thesis changes. That's why I get into stuff. I get in hard. I get in early. And oftentimes I hold for a long time. I've held Google for a long time. I only got rid of half of it recently because I needed a way of raising money. So that's a quick summary on that. And let's talk about the lessons I have learned from Stanley Druckenmiller. I read the books of these guys. I listen to them when they're interviewed. I look at what they invest in, etc. And he is a special cat. Let's explain why. Lesson number 1, I'm going to go to the top 10 from him. Then we're going to talk about his Almanac. And then we're going to talk about the top takeaways from his Bloomberg interview. Each one is kind of a nugget, but also from each different source, all the data points kind of are confluent together, which is important for you to know. Okay, so first of all, number 1 is be patient. The stock market is a long-term game, and so is the crypto market. It's important to be patient when investing. Don't try and time the market. Don't panic, sell when the market takes a downturn. So I'm a little bit different in this regard. I do try and time the market, but that's because we've got the tools to do that. Lesson number 2 is do your research. This is so important. Do your research before you invest in any stock, any crypto, etc. Do your research. Make sure you understand the company, the function, the tokenomics, the leadership team, the financials, etc. What is the company's business model? How do they expect to be successful? What's the product market fit? What are the financials like? What are its competitive advantages? Does it have a moat, etc., etc. If you don't know all of this stuff, you are gambling, and that's it. Lesson number 3, invest in what you know. This is interesting as well. Don't invest in stocks you don't understand. Stick to companies that you're familiar with and that you believe in. And this is so important. In fact, we have clearly in this regard, we have analysts out there that analyze things like Tesla without understanding what Tesla is, which is comical. They shouldn't be talking about them. Never mind, they don't invest in them because many of the people that are analysts in Tesla don't understand it. But this is a classic example. only invest in what you know and understand. In fact, Stanley is not the only person that said this. Also, Peter Lynch, invest in what you know, said it. And Warren Buffett, never invest in a business you can't understand. And that's why Warren is famous for buying things like Coca-Cola. Peter Lynch, he used to invest in things like 3M because he could understand the products that they made. Number 4, diversify. Diversify your portfolio. Very important. Don't put all your eggs in one basket, as they say. Spread your money out over a variety of different stocks or assets to reduce your risk. And I kind of do that in part. I believe in real estate, crypto, and disruptive equities. They're kind of like my way of diversifying. But inside of those, I'm very concentrated. His version actually is super interesting. He diversifies, but he has a skew. So this is his current bag. Companies like Nvidia, Microsoft, Eli Lilly, Amazon, Google, Meta, etc. What else is there? Well, when you look at these names, the skew, what I'm talking about is this AI focus. Nearly half of his bag is focused on AI stocks, which is very, very important. So this is an example of jumping on that narrative that's hot. I sometimes say, go where the bees are going, go to the flowers that have all the pollen. After all that pollen gets taken away, you go and find another flower or a narrative or a sector or whatever you want to talk about. That's very, very important. Lesson number 5 is rebalance. Rebalance your portfolio regularly. Don't go too overweight in one asset or sector, and align balance with risk tolerance and your investment goals. If you have a lot of money and you have enough, you don't want to risk it. If you don't have enough, but you want to get to a certain place in life, maybe you take on a bit more risk. And rebalancing, I've done a bit of that too, and I will be doing a lot more of it as well in the future because I believe the swings are going to be much more violent, especially across disruptive sectors like crypto and AI as we go forward. But an example of how Stanley rebalances, this is his actual portfolio up to Q1 2023 across sectors. So if you look at red is tech, which represents the AI. Look how much it grew in Q1. He basically dumped a huge amount of money in. And things like purple are energy. He got out of energy, went into AI. You can see that straight swap there, moving from one narrative to another. And he was so good at that because oil price tanked. And while you had people at Goldman Sachs and JP Morgan saying gold or oil is going to go to $100, $200, and they were all wrong. What else is there? Green is healthcare. Yellow is consumer discretionary, etc. So you can see that's how he plays. But the swings between sectors is huge and often quarter to quarter. In addition, lesson number 6, don't outsmart markets. And what he means by this, don't try to outsmart the market. Stan is advising against, again, attempting to predict or outwit the movements of the financial markets, which is kind of weird because he's also a macro guy. So he can anticipate where the markets are going to go. So I don't quite get this one. And the market is always smarter than you are. And this talks to how humble he is, which is awesome. And again, don't try to time the market and make risky bets. Although he does. He went short the S&P 500, got his head handed to him this year, but made it up in AI. And that is kind of timing and outsmarting the markets. Being first is so important. There's no point in jumping on the bandwagon after Nvidia goes up 150%. As I say, don't chase replace. Number 7, think long-term, have that long-term perspective. And the stock market is a long-term gain that goes up over time. And don't be discouraged by any short-term fluctuations. Like you see things happen in crypto. You see, SEC coming down, certain cryptos fall and tank. That shouldn't scare you off. If your thesis is the same, like, is blockchain going to be something? Yes. Is the US the be-all and end-all of blockchain? No. Will the US regulations change? Yes. So these are things you got to keep in mind. When you have that long-term perspective, you can look beyond the noise that happens short-term. In addition, lesson number 8, don't panic sell. We see people doing this at the bottom all the time. I made a complete video about people selling at the bottom, long-term holders selling Bitcoin at the bottom, proven by on-chain data. I'll add that video here if I remember to. And remember, when the market takes a downturn, it's important to stay calm. And the market always goes up in the long run per Stan. And I believe the same thing too. Especially, if we had a really bad year last year and you study history, the next year is going to be very good. And that's just the way it works. Lesson number 9 is reinvest. And this is kind of important because I've seen some people make this mistake too. It's kind of tied into the previous one and the one before that, but keep stacking. This will help grow your wealth over time. But there are some people that got the kick in the teeth last year and they left for 6 months. And then they come back and look and say, oh my goodness, look at what everything did. Everything shot up a lot. The point is, stick around. Don't take 6 months off. They can be the most important days. As I said, something like 39 days in every given 10 years are the ones where the stock market generates 80 to 90% of gains. If you're not in for those 39 days, you miss out on everything. So very, very important. Always be there. Always keep your eye on things and reinvest. Lesson number 10, very important as well. Don't give up. It's related to lesson number 9. Again, don't leave the market. It is a long-term gain. There will be ups and downs along the way. That's why I say wear your seatbelts. And when you stay patient and disciplined, you will be rewarded. That's just the nature of markets. They go up because fiat goes down. So let's talk about another one. This is his book called the Almanac. And pulling all the treasures from this man and his over nearly 50 years of experience, his macro perspective really looks at the importance of understanding macroeconomic trends. Why do you think I look at macro all the time? People say, oh, he's talking macro again. But it's important because it impacts everything. It impacts crypto markets, financial markets, etc. Keep an eye on global trends, interest rates, central bank policies, geopolitical events, wars, and they help you inform your investment decisions. Also, risk management. It's so important to emphasize the importance of risk management investing, proper risk controls, stop loss orders, being disciplined, cutting losses when necessary. Remember, some people have a hard time turning their back on a stock, whether it's a winner or a loser. They get married to it, and that's not good. You need to be flexible and adaptable. I call this tap dancing shoes. He advocates for being flexible and adaptable in response to changing market conditions. For example, changing your investment strategies, portfolio allocations, positions, new information, evolving market dynamics. So I pivoted out of other sectors last year into AI because I felt it was a thing. And that was after using ChatGPT. So I have to attribute that move to seeing me realizing very quickly, oh, wow, this stuff is real. This stuff is here. This stuff works. This can make a developer into a 3x developer or 8x developer overnight. And that's how I knew it was real. And that's how I knew it was going to be a huge space. Then focus on fundamentals again. FA first, as I always say, the importance of analyzing everything, earnings, cash flows, growth. Don't touch things that aren't growing earnings, aren't growing top line revenue, aren't unique leaders in their space. And long-term thinking, again, be patient, be disciplined, withstand short-term fluctuations, and over time you will capture long-term value. No ifs, ands, or buts. Like Bitcoin's going to go up. And finally, continuous learning is what this channel is all about, to share. Druckenmiller's successful career highlights the importance of learning all the time, being intellectually curious, understanding what's happening with the economy, industrial developments, new investment opportunities, new technology. I mean, he's been around a long time. He figured out AI real fast, and that is impressive. So I'm just going to, last thing I'm going to do, I'm going to talk about some of the key points he did summarize on Bloomberg, and then I'll let you go. So I hope you're learning a lot. So first of all, I pulled out the top 10 insights from his 40-minute video on Bloomberg a few days ago. And a couple of things, a warning. Some are alarming, some are maybe a little bit obvious. But first of all, the US is facing a demographic storm. The baby boomer generation retires and birth rates are declining. And this will put a huge strain on entitlement programs like Social Security and Medicare. Huge strain, in my words, is code for the debt will explode. Okay, we have $212 of funded and unfunded liabilities, $212 trillion. There's no way that can ever be paid for from taxes. It's done. Money printing will go on forever. That's why I say get hard assets, ladies and gentlemen. Number 2, related to government debt, running large deficits for many years. Those deficits are going to explode. We're going to be spending over $1 trillion in interest because they increased the rates beyond they should. This is kind of leading to financial Armageddon. The banks are smashed. Commercial real estate is smashed. Everything is smashed. And that's just where we are. But markets go up, life goes on. The US economy is also facing a ton of headwinds, supply chain disruptions, inflation, stuff happening in overseas, and he believes there's a recession in the future. He also said the stock market is overvalued. That's why he's short the S&P 500. But he probably forgot to realize that there's 7 names in the S&P 500 that drive it up. 7 names. They now make up 23% of the entire market cap of the S&P 500. Stunning. 7 companies make up a quarter of what 500 companies do. And finally, he said the dollar is losing its status as the world's reserve currency. I hope that doesn't offend anybody. He thinks this could lead to higher inflation and lower economic growth for the US. So he's worried about that. And he also, next 5, and that's it. He said China is becoming a major economic power. Yes, pretty obvious. But this will bring about tensions. This is key in challenging the US for global dominance. It could be increased tensions between the two countries, Taiwan, war, etc. He's a bit concerned about that. He said, and I know this is going to annoy people, but he did say, not my words, his climate change is a major threat to the global economy because it's bringing about huge extreme weather changes, rising sea levels, floods, food shortages, etc. The other thing, point 8, which is very sad, inequality is increasing in the United States, which could lead to social unrest and political instability. That was one of my predictions for 2023, that there'd be a lot more strikes, riots, etc. in the world. And like clockwork, they're happening all over the world. And technology number 9 is changing the way we live and work. This could lead to huge, he believes, job displacement and economic disruption and a downturn for those who aren't able to kind of monetize this changing technology. Again, another way of saying what I've been saying for quite some time now as well. Finally, number 10, the future is uncertain and there are many risks that could threaten the US economy, and investors should be prepared for anything. I love that. Tap dancing shoes. Always remember. So in quick summary of all of that goodness from Stan, I'm going to pull out what I believe are the top 10 most important things from my perspective that he believes in. So first of all, learn from the legends. That's what I do. I like to learn. I like to pick and create my own special formula, take the best of breed and mix them together in some type of Frankenstein. I like to focus on fundamentals. I like to do detailed research. I like to understand what I'm investing in and learn everything about it. Everything you could possibly imagine. Go a mile deep. I like to keep my tap dancing shoes on in case something happens to one of my assets. And I rebalance. But I do that more in terms of swapping one asset for another. Or lightening the load if something has run, or hedging. That's my focus. And the other key point, number 7, is kind of interesting. Stan is worried the market is overvalued, but he's still fully invested. So I'm going to step out for a sec. Even though he's short the S&P 500, he didn't take the foot off the gas of being invested in the market. And that's just so important. And you ask any professional investor, being out of the market, being all in cash at any one time, unless you have impeccable timing, it doesn't work. Also, understand the importance of macro. Keep your head out the window, as I say. Watch what's going on in the world. It's very, very important to what's happening. Never stop investing. Never stop learning, ladies and gentlemen. So thank you all for being here. Thank you all the usual suspects. Crypto Ninja, Rusty Bot, Tesla TND, Bill Whammers. Beardy is in there too. At TND Tesla, thank you for modding as well. And if you want to amplify your intelligence, you know where to subscribe right here. I will add those playlists as well later in case you ever miss them. I know it's not possible for everybody to catch everything. And that's why we create a newsletter as well. 13 cents in addition. So we'll add the link as well. Thank you all for being here. And I'll see you all tomorrow. It's Octa tomorrow. And I hope you guys enjoyed DCA this morning too. Thanks all. Bye.